Welcome to the Imperium Forex daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. To open today's webinar, the Australian dollar yesterday struck a high note of 78.08 following an upbeat consumer confidence release. However, the bulls soon promptly threw in the towel as the excitement hit a wall of supply. After a brief look at the 78 handle, the market has shifted back to a slightly bearish sentiment. Yesterday, the Westpac consumer confidence jumped from last month's release from 2.5% to 3.6%, the first time in almost a year. The majority of the consumers feeling optimistic about jobs, household spending and economic conditions. The Westpac Melbourne Institute Index of Consumer Sentiment rose to its highest level since October last year, with an improving global economy lifting people's spirits. So what does that mean for the market? Well, at this stage, any attempts towards the upside should still fail. I believe that the market will again look towards 78.10 as a potential sell zone, and beyond there, a cap at 78.45. Overall, I still feel that we are looking towards the downside with the immediate support seen at 77.65 and then 77.20. The euro dollar overnight gained further momentum as the US dollar slipped through 93 the free handle and recorded a low of 92.70 to the index, which in turn has put a slightly bullish tone to the market for the euro. Do note that the US dollar index measures the greenback strength against a trade-weighted basket of 6 major currencies and weighs at 57.6 against the euro, should I say the weighted. Now, as the market slowly digests this morning's release from the Fed minutes, it is questionable whether the minutes did hold to a slightly hawkish tone, or is the dovish outlook slightly still lingering. From the minutes, the Fed showed that the December rate hike is warranted. However, some still feel that the inflation rate has not quite got to its target. Nevertheless, I still feel the dollar index will remain bullish and eventually see the euro turn around. So a cap still holds around 118.90 or as a potential sell zone, with the immediate target seen at 118.10 and down towards 117.50. The dollar yen posted small losses overnight and hit a low of 112.07. It is viewed that the market is still looking towards that 111.60 and any advances now sees a cap around 112.60. My strategy is still to buy on dips, so looking towards 111.60 I would be a buyer, and with further gains expected from 111.60 look back towards the top side, but I'm still looking for this pullback first, because the histogram and the stochastic and the RSI is all still breaking down. So I'm not overly bullish on dollar yen as of yet. Well, the pound still remains contained at 132.60-70 resistance after a little movement overnight. Overall, the Bank of England still probably looking towards a hawkish outlook and could still see a hike in November. The market will be looking towards that. If so, we could see a further rise up towards 135 if we see a break of 132.60-70. Dips on the day likely to find support at 131.70 like it did yesterday. The gold outlook still looks to that trigger level of 1,294. Now if we see a break above that, even though that was a high yesterday, further stop losses are seen and look towards 12.99 to 1,313. Any dips on the day I expect to see as a buy towards 85, with a base now seen at 1,279. With the technical implications in place for a bullish move, I do expect to see this level eventually break away at 94. At the moment, silver's holding very well at $17.25, and any dips now still would expect to see around $16.80. The RSI is a little bit on the high side, so we could see a short-term pullback, but the other two indicators are still supporting a further rally. A break above $17.25 will give scope up towards 45 and reassess from there. And to wrap up with oil, the market still maintains its bullish hold and looks towards the $51.90-95 a barrel as a potential target, or even back to the recent high seen in September around $53 a barrel. Any dips on the day, I expect to see a buy from $50.60. So that wraps up my daily video. Thank you very much for joining me, and I hope you have a wonderful day that's ahead.